February 5th, confirmed. What the SSA just made official. This update is not a rumor, it is not speculation, and it is not based on leaked information. The Social Security Administration has officially confirmed that payments for SSI, SSDI, VA benefits, and certain stimulus programs are beginning to hit bank accounts starting February 5th. For millions of Americans, this is more than just a date on the calendar. It represents real money arriving at a critical time, as inflation continues to pressure household budgets. If you rely on supplemental security income, Social Security disability insurance, Veterans Affairs benefits, or are expecting a stimulus-related payment, this confirmation matters. And it matters now. What makes this announcement different is not just the groups included, but the timing and coordination. The SSA and Treasury have aligned payment processing to move funds faster, recognizing that delays can mean missed rent, postponed prescriptions, or unpaid utility bills. February 5th marks the start of this payment wave. Some deposits may appear earlier or slightly later, depending on your bank, but this is the official launch point confirmed by federal agencies. That said, not everyone will receive the same amount. Not everyone will receive funds on the exact same day, and not every program follows identical rules. That's where confusion often begins. In this series, we're going to break down who qualifies, what determines your amount, how timing really works, and what to do if your payment doesn't arrive right away, using only confirmed information, not hype. Because when money you depend on is involved, clarity matters more than excitement. Who is included in the February 5th payment wave? Now that February 5 has been officially confirmed, the next question is simple but critical. Who exactly is included in this payment wave? According to the Social Security Administration, this round of payments covers four major groups that millions of Americans rely on every month. First, Supplemental Security Income, or SSI. SSI supports low-income seniors, people with disabilities, and individuals who meet strict income and resource limits. For SSI recipients, February 5 marks the official start of February payments. Depending on your bank, funds may appear slightly earlier or later, but this is the processing window the SSA has confirmed. Second, Social Security Disability Insurance, or SSDI. SSDI serves individuals who worked and paid into Social Security but are now unable to work due to a qualifying medical condition. SSDI beneficiaries are also included in this February 5 payment timeline. Third, Veterans Affairs benefits. Veterans receiving VA disability compensation or pension payments should expect deposits during this same period. These payments reflect both regular monthly benefits and any applicable adjustments. And fourth, certain stimulus-related payments. For eligible individuals and families, stimulus funds tied to recent tax filings and income thresholds are being distributed alongside these benefit payments. Here's an important point that reduces uncertainty. If you are already receiving SSI, SSDI, or VA benefits, you are almost certainly included in this wave. There is no new application required just to receive a routine payment. Where confusion often arises is timing and amount, not eligibility itself. And that's exactly what we'll break down next: how much you might receive and why amounts vary from person to person. How eligibility is determined and why it's not the same for everyone. One of the most common misunderstandings around the February 5th payments is the idea that eligibility works the same way for everyone. It doesn't. Each program included in this payment wave follows its own set of rules, and those rules are what determine whether you qualify and how much you receive. Let's start with SSI. Eligibility for supplemental security income is based on strict income and resource limits set by the federal government. SSI is designed to reach seniors and disabled individuals with very limited financial means. Even small changes in income or assets can affect eligibility or payment amounts. Next is SSDI. SSDI eligibility depends primarily on medical condition and work history. To qualify, you must have worked long enough and recently enough under Social Security rules, and your medical condition must meet SSA's definition of disability. Income from work can affect SSDI payments if it exceeds certain limits. For VA benefits, eligibility is tied to military service and service-connected conditions. Veterans must meet specific criteria related to their service record, disability ratings, or pension qualifications. Then there are stimulus payments. Stimulus eligibility is generally based on recent tax filings and income thresholds. The IRS uses your most recent tax return on file to determine whether you qualify and how much you receive. Here's the key takeaway. If you are already receiving these benefits, eligibility for the February 5 payments is usually already established. The complexity isn't about whether you qualify, it's about how the rules apply to your individual record. That's why some people see payments quickly, others later, and some in different amounts. And that leads directly to the next question seniors are asking: how much should you actually expect to receive? How much you might receive, and what determines the amount. After confirming eligibility, the next question most people ask is straightforward. How much money should I expect to receive? This is where expectations need to be set carefully. There is no single dollar amount that applies to everyone receiving payments starting February 5th. The amount you receive depends entirely on your individual benefit record and the program you're enrolled in. For SSI recipients, payment amounts are determined by federal benefit rates reduced by any countable income you may have. Some recipients receive the full federal amount, while others receive less, depending on their financial situation and living arrangements. For SSDI beneficiaries, payments are based on your past earnings history. The more you earned and paid into Social Security during your working years, the higher your SSDI benefit typically is. That's why SSDI amounts can vary widely from person to person. VA benefit amounts depend on factors such as disability rating, service-connected conditions, and family status. Two veterans can receive very different payments even if they served during the same period. As for stimulus payments, those amounts are determined by income thresholds and tax filing status. Household size and filing history also play a role. Another important detail is that the February 5 payments reflect the most recent adjustments, including any approved cost of living increases. For many households living on tight budgets, even a modest increase can make a noticeable difference. But it's important not to compare your payment to someone else's. Different programs, different rules, different records. The amount you receive is calculated specifically for you, and understanding that helps avoid unnecessary confusion when deposits arrive. Payment timing. Why February 5? Is a start date, not a deadline. One of the biggest sources of anxiety around this update is timing. When people hear February 5, it's easy to assume that everyone will receive money on that exact day. But that's not how the payment system works. February 5 is the official start date of this payment wave, not a single drop date. The Social Security Administration and the Treasury release payments in batches, not all at once. That means some deposits may appear on February 5th, while others may show up shortly before or after, depending on how your bank processes incoming funds. Banks play a larger role here than many people realize. Some financial institutions post direct deposits as soon as they receive notice from the Treasury. Others wait until the official settlement date. That's why two people on the same program can see their money arrive on different days, even when everything is working correctly. Another important factor is payment method. Direct deposit is the fastest and most reliable way to receive benefits. Funds sent electronically move through the system far quicker than paper checks. Paper checks are still issued in some cases, but they are more vulnerable to delays caused by mail processing and delivery issues. This is why SSA consistently encourages beneficiaries to use direct deposit whenever possible. Here's the key point to remember. If you don't see your payment immediately on February 5th, it does not mean there's a problem. In many cases, it simply means your payment is still moving through the normal processing cycle. Understanding that February 5 is a starting point, not a deadline, can help reduce unnecessary stress while deposits continue to roll out. What to do if your payment hasn't arrived yet? As February 5th arrives, many people will check their bank accounts first thing in the morning, and for some, the money may not be there yet. If that happens, the most important thing to do is not panic. There are several common non-serious reasons why a payment may not appear right away, even when everything is working as intended. The first is bank processing time. Not all banks post deposits at the same speed. Some release funds immediately when they receive notice from the Treasury. Others wait until later in the day or even the next business day before posting the deposit. The second reason involves verification or pending reviews. If your record recently changed, if you updated banking information, or if an application was processed close to the cutoff date, your payment may still be moving through final checks. The third reason is payment method. Direct deposit is faster. Paper checks take longer and are subject to mail delays. If you receive checks by mail, a delay of several days is not unusual. Here's what SSA recommends before taking action. First, give it time. Allow a few business days after February 5th for deposits to appear. Second, check your online account, such as My Social Security or the VA benefits portal, to confirm payment status. Third, review your banking information to make sure nothing has changed or expired. Only after those steps should you consider contacting SSA, VA, or your bank. Most delays resolve on their own, and in the vast majority of cases, a late payment is not a denial, it's simply timing. Why online accounts matter more than ever right now. One of the most practical tools beneficiaries have right now is also one of the most overlooked: your online benefits account. As payments begin rolling out around February 5th, having access to official online portals can make the difference between clarity and confusion. For Social Security recipients, that means a My Social Security account. For veterans, it means access to VA benefits portals. For stimulus-related payments, it may also involve IRS online tools. These platforms allow you to see information that phone calls and headlines simply cannot provide in real time. Through your online account, you can check whether a payment has been issued, see the exact amount sent, confirm the payment method, and deposit date, review recent notices or messages tied to your record. This is especially important during large payment waves when call centers are often overwhelmed and wait times are long. Another key benefit is control. Online accounts allow you to update contact details, review banking information, and monitor changes without waiting for mail. That can prevent small issues like an outdated address or closed account from turning into longer delays. For many people, the stress around payments doesn't come from money itself. It comes from not knowing what's happening. Online access reduces that uncertainty. If you haven't set up your account yet, doing so now can help you stay informed, not just for February payments, but for future updates as well. These systems are designed to give you visibility into your benefits without relying on secondhand information. In a time when timing matters, official online access is one of the most reliable ways to stay grounded in facts. Stimulus payments. How tax filing affects what you receive alongside SSI, SSDI, and VA benefits. Another piece of the February 5 update involves stimulus-related payments, and this is where many people get confused. Stimulus eligibility is not determined by SSA benefit status alone. Instead, it is largely based on your most recent tax filings and your reported income. The IRS uses the latest tax return on file to determine whether you qualify, how much you receive, and where the payment is sent. That means timing matters, not just for payments, but for paperwork. If you filed your most recent tax return early electronically and included direct deposit information, you are generally positioned to receive stimulus payments as quickly as possible. For many people, those funds are included in the deposit starting around February 5th. If you have not filed yet, or if your return is still being processed, stimulus payments may arrive later, even if you qualify. In some cases, the payment will not be released until the IRS has current information to work with. Another important detail is household changes. Changes in income, filing status, dependents, or banking information can all affect stimulus timing and amount. That's why two people receiving the same SSA benefit can see very different stimulus outcomes. Here's the key takeaway. Stimulus payments follow tax rules, not SSA payment schedules. They often move alongside benefit deposits, but they are governed by a different system. Understanding that separation helps explain why some people receive combined deposits while others do not, and why filing accurately and on time remains essential. Combined deposits, back payments, and why your amount may look higher. As February payments begin to arrive, some recipients may notice something unexpected. The deposit looks larger than usual. This can raise questions and sometimes concern, but in many cases there is a straightforward explanation. During large payment cycles like this one, the SSA, VA, or Treasury may combine multiple amounts into a single deposit. This is done to streamline processing and reduce delays. For example, a regular monthly benefit may arrive together with a cost of living adjustment that was recently applied, a delayed payment from a prior period, a back payment tied to a completed review or correction. When this happens, the system sends one combined deposit rather than multiple smaller ones. This does not mean you are receiving extra money by mistake, and it does not mean your ongoing monthly amount will always be this high. It simply reflects that more than one payment item was processed at the same time. This is why reviewing your payment statement or online account details is important. Those records will break down exactly what the deposit includes: regular benefits, adjustments, or back pay. Another reason amounts may vary is timing alignment. If payments from different programs, such as SSI and stimulus funds, are processed close together, they may appear on the same day or even in the same deposit window, depending on your bank. The key takeaway is this: a higher than expected deposit is usually a sign of consolidation, not an error. And a return to your normal amount the following month does not mean something was taken away. It simply means the system finished catching up. Working while receiving benefits. What you need to know right now. Another topic that comes up frequently during payment updates like this one is working while receiving benefits. And this is an area where misunderstandings can lead to real problems if expectations are not clear. For SSDI recipients, income from work is closely monitored. The SSA sets specific earning limits, and going above those limits can affect payment amounts or eligibility. However, that does not mean SSDI recipients are prohibited from working. The SSA offers work incentive programs, including trial work periods. These allow beneficiaries to test their ability to work without immediately losing benefits. During a trial work period, you can earn income above standard limits for a limited time while still receiving full benefits. For SSI recipients, the rules are different. SSI is strictly income-based. Any earned income can reduce your monthly payment once it passes certain exclusions. That reduction is calculated according to clear formulas. It is not a penalty, but part of how SSI is designed. This is why accurate income reporting is critical. Failing to report earnings or reporting them late can result in overpayments. Overpayments may later need to be repaid, even if the mistake was unintentional. That's why SSA emphasizes timely and accurate reporting. For VA beneficiaries, work rules depend on the type of benefit and disability rating. Some veterans can work without affecting benefits, while others may face limits depending on their classification. The key takeaway is this: working does not automatically disqualify you from benefits, but it does introduce rules that must be followed carefully. Understanding those rules helps you avoid surprises and protects the benefits you rely on. How these payments interact with other assistance programs. When new payments arrive, one important question often gets overlooked. How do these payments interact with other assistance programs you may already rely on? For many seniors, disabled individuals, and veterans, SSI, SSDI, or VA benefits are only part of a larger support system. Programs like Medicaid, Medicare, SNAP, housing assistance, and energy assistance often work alongside these benefits, and that interaction matters. In many cases, receiving your regular SSA or VA payment does not automatically change eligibility for other programs. These benefits are expected and already factored into most assistance calculations. However, changes can occur when income levels shift. For example, SSI is income-based, so increases in other benefits can sometimes affect SSI amounts. That adjustment follows predefined rules and does not mean benefits are being taken away arbitrarily. With Medicaid and Medicare, eligibility is often tied to income thresholds and benefit categories. Some seniors qualify for additional help programs, such as Medicare savings programs or extra help with prescription costs, based on their total income and resources. That's why it's important to understand the full picture, not just one payment. Housing assistance and food programs also rely on income reporting. When payments change, those programs may reassess eligibility during regular review periods, not immediately and not automatically. Here's the key point. Receiving February payments does not mean you suddenly lose other support, but it does mean you should stay aware of reporting requirements and review notices carefully if they arrive. Coordination between programs can feel complex, but the goal is stability, not disruption. Understanding how these systems work together helps you protect the full range of assistance you depend on. Fraud warnings, what SSA, VA, and IRS will never ask you to do. Whenever large-scale payments are announced, there is one risk that rises alongside the attention: fraud and scams. History shows that scammers move quickly when benefit payments are in the news. They rely on confusion, urgency, and fear, especially among seniors, disabled individuals, and veterans. That's why this part matters. The Social Security Administration, the VA, and the IRS all follow very strict communication rules. They will never call you unexpectedly demanding personal information, text or email you asking for your Social Security number or bank details, ask for payment, fees, or gift cards to release benefits, threaten to suspend benefits unless you act immediately. Any message that creates panic or urgency should raise a red flag. Another common tactic involves promises. Some scammers claim they can speed up your February 5 payment, secure a stimulus amount, or unlock additional funds for a fee. That is not how government benefits work. Your eligibility and payment timing are determined by official records, not by third parties. No outside service can increase your benefit or move your payment ahead in line. Legitimate communication comes through official mailed notices, secure messages in your verified online SSA, VA, or IRS account. If you receive something that doesn't follow those channels, stop before responding. The safest action is always verification. Check your official account, contact the agency directly using published numbers, and never share personal information unless you initiated the contact. Staying informed protects your money and your peace of mind. Payment schedules beyond February 5th. What comes next? February 5 is an important milestone, but it is not the end of the story. For many recipients, these payments are part of an ongoing schedule that continues throughout the year. Understanding what comes next helps you plan with confidence instead of reacting month to month. For Social Security retirement, SSDI, and survivor benefits, payments generally follow a monthly schedule tied to your date of birth. Some recipients are paid early in the month, while others receive funds later, depending on long-established SSA rules. SSI payments usually arrive on the first of each month, unless that date falls on a weekend or holiday. In those cases, payments are issued earlier to ensure access to funds without interruption. VA benefits follow their own monthly schedule, typically paid at the beginning of the month, and adjusted as needed to reflect cost of living updates or eligibility changes. What matters most is consistency. Once your February payment is processed, future payments will continue according to your regular schedule unless your record changes. That means changes in income, work activity, address, banking information, or eligibility status should always be reported promptly. Another important point is budgeting. Knowing when your payments arrive allows you to plan for essentials like rent, utilities, medications, and groceries. Many beneficiaries find it helpful to align bills with benefit deposit dates to reduce stress and avoid late fees. February 5th marks a coordinated payment start, but your benefits are part of a longer, predictable cycle. Staying informed about that cycle gives you control. Practical planning tips for managing February payments. As these February payments arrive, one of the most important things beneficiaries can do is use the timing to their advantage. For many households, especially seniors, disabled individuals, and veterans, these payments form the backbone of the monthly budget. How you plan around them can reduce stress and help avoid last-minute financial pressure. The first practical step is confirmation. Once your payment arrives, take a moment to verify the amount through your official account or statement. Make sure you understand whether it includes just your regular benefit or a combined amount such as an adjustment or back payment. Knowing this up front helps prevent confusion later in the month. The second step is prioritization. Many recipients choose to immediately allocate funds to essentials, rent or mortgage payments, utilities, medications, and groceries. Covering these basics early creates stability and reduces anxiety about unexpected expenses. Third, consider timing your bills. If possible, align payment due dates with your benefit deposit schedule. Many utility companies, landlords, and service providers are willing to adjust billing dates if asked. This simple change can make monthly cash flow much easier to manage. Fourth, build a small buffer, even if it's modest. Setting aside a small amount, when possible, for emergencies like medical copays or repairs can provide peace of mind. Even a limited cushion helps absorb surprises without disrupting essentials. Finally, stay organized. Keep records of payment dates, amounts, and notices. Whether on paper or digitally, having clear records makes it easier to spot issues early and respond calmly. These payments are designed to support stability. Using them with intention helps them go further. Final takeaways. What this February 5 update really means for you. As we wrap up this full update, it's important to step back and focus on what truly matters most. February 5 is not just another payment date. It represents a coordinated effort by the Social Security Administration, the Treasury, and the VA to deliver critical financial support to millions of Americans who depend on it. For recipients of SSI, SSDI, VA benefits, and stimulus-related payments, this update brings one key message. The system is moving and your benefits are active. At the same time, it's equally important to stay grounded. Not everyone receives the same amount. Not everyone receives funds on the same day. And not every deposit tells the full story at first glance. Understanding eligibility rules, payment schedules, and how different programs interact helps replace uncertainty with clarity. When you know what to expect and what not to expect, you're far less likely to be misled by rumors, exaggerated headlines, or scams. This update also highlights something bigger. These benefits are not bonuses. They are not favors. They are earned supports, designed to provide stability in a time when costs remain high and budgets are tight. Staying informed, organized, and proactive allows these payments to do what they are meant to do: support your independence, your health, and your peace of mind. As 2026 continues, there may be more updates, adjustments, and discussions. Some will be routine, some may feel confusing at first, but when you rely on official sources and verified information, you stay in control. The goal is not to react to every headline. The goal is to understand the system well enough to move forward with confidence.